Stocks extending their losses clearly on the weaker than expected Philly Fed data within the last few minutes. We're down 95 points on the big board. This is just one day, of course, after the Fed minutes and Intel's upbeat quarterly results sparked again a market tug of war. So what should investors focus on most, earnings or the economy? Let's bring in Fred Dixon, Chief Market Strategist at D.A. Davidson & Company, and Ivor Johnson, Director of Financial Planning at Scarborough Capital Management. Ivory, what do you tell your clients? What should they focus on?
Well, I tell them to focus more so on the economy. When you look at the earnings, it's really a reflection of the past 3 months of profitability, and we know that people have gotten into trouble in the past by focusing on short-term results. When you look at the economy, what concerns me is just the sheer magnitude of the government debt. In 5 years, if the government didn't spend money on anything except Social Security, Medicare, and Medicaid, we would still have a budget deficit. In 15 years, 31 states will have exhausted their state pension money. And so it begs the question, how do you raise taxes and cut benefits and still grow the economy? Even when you look at the budget deficit, half of it is probably just a reduction in tax receipts, and the government, in a sense, might be at the point where they're both the cause and the victim of a slow economy.
Ivory, what you're saying, I agree with, and therefore I think it makes great sense. Of course, if I disagree with you, I'd call it your opinion and dismiss it. But here's my point. How can you be optimistic at all, given those factors that you're talking about with this huge debt load?
Well, there's two reasons for that. Number one, this is all fixable. I mean, you can raise the FICA tax from 6.2.
I'm sorry to interrupt, but you yourself said,
yeah.
How can you raise taxes, cut benefits, and still get an economy that's strong?
Well, I don't know if it's optimism or pessimism. This is just the world we live in, and wealth never disappears; it just shifts. I mean, there are other things that you can do to protect some of your assets.
Ivory, can I interrupt you momentarily? We've got a record low now, a record low on the 2-year yield. Sorry, continue as you were.
Yeah, wealth never disappears; it just shifts. I just look at it from a reality standpoint and know that there are other things you can put your money in to protect your assets. I think we're going to have very, very slow growth for the next decade. I'm very concerned about the jobs. If we look at the earnings, corporations have massive amounts of cash. A lot of the earnings is a function of the fact that they've laid people off. Labor cost is the #1 cost of doing business. We also know that government spending is a big part of the earnings because the government's traditionally 20% of GDP.
Fred,
this is all unsustainable.
Fred, let me ask you something that's been on my mind for a long time. Whether this, in a sense, it would be rude to call it navel-gazing, but our obsession with what is happening with the American economy and with what capital is or is not delivering for investors is to miss the point. And actually, this may be the decade, the beginning of a long period of time when it is really to the east and to Asia, and in essence, the world is changing. And we're kind of missing the trick. There will be a difference between how the American economy does and what we do as investors and where capital will go. And actually, that dichotomy is only going to increase. Would that be fair comment in your view, Fred?
Simon, I think it's absolutely fair. There's been a shifting in terms of how capital has been invested, the productivity, where the growth rates have coming from. Obviously, we take a look at the economy. I know that the original question was, should we be looking at earnings or the economy now? We look at the economy, but at the same time, right now, we're getting a reality check from global corporations. This week, we had a few reporting, including Intel, that delivered fairly interesting but very, very exciting numbers, suggesting that maybe our estimates of the economy might have been overblown. We'll see how that progresses as we go through the quarter, but we're off to a reasonably good start, and we will be looking at the difference between growth rates in the U.S. and internationally, and we do expect to see international growth exceed growth here in the U.S., and probably capital will flow accordingly.
Now I'm really bummed. Okay. Both of you guys, I mean, you speak the facts, no question about it, and I'm getting bummed out. Thank you.
Thank you.
Ivory, Fred, appreciate your time.